Breaking economy news, manufacturing revs back up with some inflation too. Tale of two inflations continues with commodity prices falling 0.7% the last year, minus food and energy, while services prices, less energy, are running 2.8% up. The net result for overall inflation is still positive, we hasten to add. So we got ourselves a little inflation this morning with core CPI rising 0.2% this month in October. You know the drill. The more 0.2s we get in a year, then 2 times 12 equals 2.4% core inflation. 2.4% would be too high, too much inflation. Probably this is where inflation is going to go once the big bust in commodity prices hits bottom and import prices stop falling as well. The economy is at full employment after all. The trend in the first 10 months of 2015 is all 0.2s, except for 0.1s in May, July, and August. May's 0.1% doesn't really count because April was 0.3%, which averages out to 0.2. What kind of core inflation do we have anyway? Shelter costs, both home ownership and rentals, are up 0.3% for a second month in a row. There is a new housing bubble percolating in prices due to the Fed's zero rates policy, if you didn't know it. Medical care services jumped, which seems to be some sort of catch-up here, as hospital services are up a big 2% all in 1 month in October. How's the economy faring? Well, industrial production is out and manufacturing is back. No more strong dollar headwinds affecting exports, apparently. Industrial production fell 0.2% in October, but it's actually a little higher its level due to upward revisions, mostly back in August. Industrial production is comprised of manufacturing, mining, and utilities. Manufacturing is key, however, to the economic outlook, and factory production here is a sharp 0.8% higher now than we knew the trend to be just a month ago. Net, the rumors of low inflation are not true. There is not no inflation out there. Core CPI inflation is up 0.2% in September and now again in October. On a year-to-year basis, core CPI is 1.9%, and this is where inflation will be once the $100 to $40 oil price drop falls completely out of the year-on-year inflation data in the report due out in February next year. If it's the economy, stupid, for this election too, manufacturing production is back from whatever ailed it last winter with either the cold weather or maybe the strong dollar depressing exports. With the recovery in factory production, the last headwind to the Fed lifting off in December falls to the wayside. Manufacturers are back, and if this positive new development is any indication, 2016 is going to turn out to be a good one for the economy. More growth and inflation and higher rates too. Bet on it. The economy is better than you think.